Gold increased again for the third day, gaining alongside equities and other commodities. German and French leaders are planning to discuss the euro at a meeting today, and China has announced it will focus on aiding growth. I am joined by Adam Sarhan, founder and CEO at Sarhan Capital, to discuss the current performance of gold. Thank you for joining me, Adam. Why do you believe it has suddenly begun to rise when investors before were treading so carefully?
Sure, there are a few reasons. Number one, gold was oversold to the downside. You had a very, very sharp move in a very short amount of time. And if you notice on any chart of gold, you can see that it found prompt support near 1520, which was Q4 2011's lows right in December. And it bounced. In December, the low was 1523. The low last week was 1526. So it's not a mistake or a coincidence that the bull stepped up and defended support.
Before the rise last week, investors were starting to see gold more as a risky asset rather than a safe haven. Do you think it is safe to say that gold will behave more like a safe haven again?
Well, it depends on what happens in Europe. Number one, gold traditionally has been a safe haven. However, during times of duress, which we saw over the past 10 days or so, gold is, at the end of the day, it's a risk-on asset. So when risk-off dominates, risk-on assets, i.e. gold, other commodities, and equities fall. So in its purest sense, during extreme duress in the economic system, you see gold fall. We saw it in 2008. We've seen it just the last 15 days or so. And we'll see it again going forward if you have a major shock or threats of a shock to the global economy.
China is investing greatly in gold. Do you think this will continue and allow gold to increase even further?
It depends on what happens again in Europe, because gold, there's two situations here. Number one, if last week the CFTC reported that hedge funds and other large funds dumped $2 billion in gold, net longs versus net shorts. The net shorts rose to the highest level since December of 2008. Whenever you see an extreme number of longs or shorts, you have to expect a counter trend move to happen. So what a lot of the move in gold is due to forced selling. In other words, if there are other holdings in Europe or of large funds fall, lots of times these people, these large participants, are forced to sell their gold because they have to cover for other losses in other asset classes. So if you have a situation where China continues to buy, but that's one country. If you have all of Europe and other large funds that are forced to liquidate gold because of losses in their overall portfolio, that might overwhelm the buying in China.
A reason gold was declining was due to contagion concern about the euro. Should investors still be cautious about investing in gold because of the uncertainty for Europe's economic future?
I think the line's in the sand on the downside and the upside. Right now, gold is in purgatory, where if you look on a very simple, basic situation, support is very clear: 1523, 1526, which was last week's low or December's low. If support is taken out, in other words, if gold trades below the 1520 area, then you'd have to expect another leg lower to begin. Conversely, resistance is very clear in the 1620, 1630 area, which was most of 2012's lows, up until it broke last week. Now, if you look at gold over the past 15 days, you've only had 4 up days in the entire month of May. And that leads me to believe that the bears have a slight upper hand. But right now, expect this range-bound action to continue. The 50-day moving average, the 200-day moving average or resistance above here, and then below here, use that 1523, 1526 number as support. If it breaks above resistance, which is 1630, or the 50-day moving average, 200-day moving average in that area, you'd expect another leg higher. If it breaks down below support, you expect another leg lower. Until then, expect a little bit of this range. Let gold take a breath. Let investors pause to consolidate the recent move before the next move wins.
Gold is a close negative correlation with the US dollar. Dollar strength was weighing heavily on prices, but now that gold is beginning to rise, how do you see the dollar performing?
Sure. The dollar actually has replaced gold in some aspects, as your earlier question, as a safe haven, and also U.S. bonds. When investors are really flocking for that safety, they look at the U.S. dollar and they look at bonds. A big portion of the inverse relationship between the dollar and gold is due to the fact that the euro, well, there's two things. One, the gold is denominated in U.S. dollars. So when the dollar appreciates, gold becomes less expensive and vice versa. So as the dollar goes up, gold, it's more difficult for foreign investors to accumulate gold and other commodities that are denominated in dollars. So that's the inverse relationship. If you look at the US dollar, it's been up almost, you had a very strong run over the past 2 weeks or so. It was up 14 consecutive days in a row. And for the US dollar to be up 14 days in a row, that's not Aunt Mary and Uncle Bob doing the buying. That's large institutions and governments that are stepping up and buying the US dollar. And at the same time, gold fell hard. So that inverse relationship, at least right now, remains intact.
Where do you see gold heading within the next 3 months?
I'd say right now it's very, very data dependent. And if you look at the overall global economy, if we see signs of the global economy continuing to grow, which at this stage of the game it's very questionable since we've seen big slowdown in the BRICS. You see a slowdown in China, you see the slowdown in India and in Brazil, and also in the Western economies. If you have a shock to the system, whether it's Greece or it's Spain or it's Italy or it's Portugal or some other country that outside the Eurozone that we don't even think of, if we have another shock to the global economy, right now gold itself will suffer alongside other risk-on asset classes if that risk-off theme dominates and gets stronger.
Thank you, Adam. That's all we've got time for right now, but stay tuned to Dukascopy TV for more exclusive interviews. Goodbye.